What's up, guys? It is Thursday, August 25th, and it's 11:35 a.m., and this is the daily market update. So we're going to do things a little different today. We're going to look at a couple new charts that I found, and kind of relatable to the dollar. When like these things go up, the crypto markets crash, stock markets crash, and when they go down, cryptos and stocks do well. So let's look at these four new charts from the Federal Reserve banks. And then let's look at the NASDAQ 100, and then we'll look at the total crypto market cap. So first off, we have this one right here. It's the Chicago Fed National Financial Conditions Credit Subindex. And we can see that if we label the times that we go up here. So this is January of 2020. And that's when we started our ascent. But we really peaked here around March of 2020, that March COVID crash. And then even back here, we can see that we went in August of 2015. And then let's see we'll go June of 2012 as well. And then we'll do this time as well. So around May-ish, end of May 2022. So now I'm going to pull up the total market cap, or the Bitcoin chart at least. So let's see. All right, so we're going to label the same points here. So we said May 23rd, 2022, and that is right here. Then we have March 16, 2020, around there. And then we got August 2015. Here we go. And then we have June of 2012. So let's see where that is. All right. So what we got here is that these 4 points represent these 4 points. And we can see that in June of 2012, when we had, rose here, but came back down. So this was by September or end of August, early September, we came back down in this. So that coincides with, end of August, early September. This is more of just kind of grinding our way up. So maybe this is kind of an outlier. But if we look at August 2015, we can see that that was kind of our second double bottom here, where we kind of sold off again. So this was a pretty steep drop, $330 to $200. That's 50% drop. And then when we kind of came down in this and we leveled out, this was that period. Oh, sorry, right here. So when we were up here this whole time, but when we came down in this is when we really had, and you can see both the cursors, our parabolic rally where we broke out of the all-time high from right here at this point. At the same time, this really sold off. It came down a lot. And you can see that as we were kind of leveled off here, Bitcoin just went on an absolute rally. And then we were still going sideways here. And this is what leads us to March of 2020, where, we had a huge spike here. And then that coincided with us coming down, doing a double bottom, having a 50 or 70% drop. And then as soon as this came down here, and it kind of just went up and down a little bit, but as soon as it leveled off again and came back down, same scenario. We're back up at the all-time high, just back over here. And then we pretty much just skyrocketed because this was leveled off here. And then recently we had another rise in this, and that's what contributed to a 50% drawdown. So what we're seeing right now is this starting to come back down. And that's a good sign, because we know that when this comes back down and it levels off, that means cryptos will probably grind like this up as this is coming down. But as soon as it flatlines, that's when we'll be breaking all-time high again and just going on another huge rally until maybe 2025 when we have another spike here. So this is a new way of looking at the correlation, the inverse correlation between say if we're looking at the dollar, we know when the dollar goes up, cryptos go down. It's another way of doing it. So it's pretty cool. And it's easier to do because it's just it's really just a spike up, flatline, down, flatline. So easier than looking at the dollar chart. Then we have this one here. So Chicago Federal National Financial Conditions Leverage sub index, and this was the credit index. So we'll do the same thing here. So this is NFCI lever. Okay. NFCI lever. Okay. So then we got this point. We'll mark the same times. So we'll see when it spikes here. Let's go to, well, we saw here that in 2007, right, to 2008, when we had a rapid rise here and leveled off. That's obviously the great financial crisis back in 08. And then wasn't until we came back down here where kind of the stock market got out of that bear market and really started to rally again. But let's label January 2013, which is this point right here. So I'm going to move this over. So January 2013, we mooned, same kind of scenario. We got back up to the all-time high. This came down back to levels that, are the flatline level. And then we just shot up crazy. And then over here, we had that rapid rise again. That contributed to the 50% drawdown. And then at this point, same scenario. When we came down from these levels and flatlined, that's when price was back up to the all-time high. And we broke out. And then it wasn't until this point right here, May 2018, where we started to rise in this. And then it was kind of a clear sign that, hey, until this comes back down, we're not going to go on a huge rally, and we're likely in a bear market, and we're going to fall lower until that happens. So right here, we're still up there. And then right here at this point, we came down, and it was quick, but that still contributed to like a 4 times your money in Bitcoin. And then we topped right when we came back up to these levels. So then when we sold off here at this point and we came down in this, that's when we got back to our all-time high, right? We were at our all-time high before this started to tank. And then as it was tanking, Bitcoin's price went up a ton. And then we leveled off. Then we're coming down here. And then we started to rise again right here, right before the crash. We're at $40,000. This started to rise. Now we're at 20K. So I want to see this level off and come back down. And we're going to know that cryptos are going to pop at that point. So let's look at the next one. So then we got ANFCI, Chicago Fed Adjusted National Financial Conditions Index. ANFCI, okay. Cool. All right. So now we're going to label the same points. And this one's more dramatic. I like this one a lot. So let's go to 2011, December, January 2012, same kind of scenario. So January 2012, let's go to it. And let's just actually go to early December. So early December was equivalent right here. And that's when we started our descent down in this. And that's when we reached our bear market bottom and we just went up a ton. And the reason why we went up a ton like this is because during that whole period, right? We just been, so from 2012 to 2013, we were down here this whole time. And then we started to rise. So that could have been what contributed to this downtrend right here. And then as soon as we pulled back down like that, that was at the same, right here was that point where we started to decline in that index. So it was that point right at the all-time high. And then as soon as we started to pull down, we had our parabolic rally right there. And then at this point, we started to, come back up a little bit. And even just like a move like that will cause crypto to, go into a bear market. We fell down here again. And it can even just be a move as small as, that coming down like that is what caused this. But then we started to decline in it again. And that's what contributed to that. And then we started to decline again. And that's what contributed to that. And then we had a rapid rise right here, right at the time of the COVID crash. So rapid rises result in rapid sell-offs in crypto. So as soon as we came back down in this and recovered, right, we went sideways, flatlined, and that's what took us from the bottom here all the way up, even all the way up to here. Like this whole point like was bullish, and then as soon as we started to rise right here, that's when we got our change of the trend and had a complete sell-off. We peaked over here though, so I believe we already hit our bottom. This is more proof because we peaked over here, we've already came back down a ton, and at this point that we peaked and we sold off here was the exact bottom when we called it that day around $18,000. So now we started to trend up, and this is still going down. So this is great news. We want to see that start to keep going down, level off, and then we'll see this start to grind up here. And then as it's leveled off, we're going to go on another absolute parabolic rally like that. So for the last one, we got the NFCI, which is, let's see, Chicago Fed National Financial Conditions Index. And let's see what's happening here. So this is March of 2020, same thing, rapid rise, rapid sell-off right here. Same thing. Now, so this is an inverse relationship. 2008, 2007 to 2008, 2009. It wasn't until 2010 or 11 that we recovered out of that great financial crisis. The reason why we had it is this was the huge warning signs that we spiked up here like that. And then we have like December 2011, and we know that December 2011 called the absolute bottom right there. We had a rise, we fell down a ton, and this whole period of just being down here like that, we've just been on a rip. And then we had a spike like that up here. That was a COVID crash. And then we're having like a rise right here. So let me see if I can zoom in. So even just something like this rise from, this is January 2022, we started to increase our acceleration of rising. So I'm going to put this right at January 2022 and then right here for January 2022. And at that point, that's when we started to change our trend. We broke our support. We went sideways for a bit, broke our support, and then we've gone down while this has gone up. Now this has started to pull back around the same time that we reached our bottom. And now we started on an uptrend as far as Bitcoin goes. So I would like to see this come back down and just stay flat. You do not want to see this have a big spike up, that's for sure. A big spike up is no good. But even just a rise like this can cause a market to sell off. Like even like right here, July 2014, we were in a downtrend, but we started to like level off, and then we started just a slow ascent. And that's what took us in July 2014 down from $600 all the way down to $200, which was, I believe, like a 66% drop. So even just something like that. So that's why I think I'm going to create an indicator to kind of measure this. I'm going to come up with like an algorithm or formula to measure like these 4 charts to put us ahead of the game. And because like we could use the dollar chart, and then we could combine these 4 charts with it, and I think we'll be on top of it. I mean, this is probably called every single huge market event or change in trend for like all assets, because we got the late 70s spike here. I wonder what was going on at that time. Maybe it was like that inflation period. I'm not sure what happened around that time, but we know that 07, 08, 09, that rose up a ton, stock market crash. Then we have the 1980s. This was, I think, the time of the inflation and everything like that. And then as soon as we leveled off in the early 90s, this was like the dot-com era, like early beginnings, the boom. And then 1998, I think this was around like the 2000s was when we had our dot-com crash. And that's because we started to rise up here more, whereas this whole time was like flatlined. And then we had our crash, and then we started in a downtrend, and then all of 02 to like basically 08, 07, we're in this flat trend, and then we had our rapid rise. So like this is going to be a good indicator or a good chart to look at, and if I can turn it into an indicator, we'll be ahead of the game and know kind of pick up early signs ahead of the time if this is starting to rise at a rate faster than, say, the past 90 days or something like that. We could really analyze this and be ahead of the game. So from what I'm seeing, I'm watching these charts. To me, it looks like we've already bottomed. I've already said that we bottomed in the macro trend, but to me, even these charts have shown that that's likely the case. So I'm going to be watching it. I'll probably set up alerts for this chart. And that's it for this market update. So I'll see you guys in the Discord.